What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, May 7th. All right, guys, so SPY here today up $5.28 a share. That's plus 1.03% in regular trading hours, down just a tad, essentially flat here in the after hours. Listen, as always, after hours, it's easy to move these things around. Even the entire market, really, even the big blue chip stocks that are going to push SPY around, simply because volume is so low. So wherever that ends up, typically, unless we see a really high volume, news-driven move, take that with a grain of salt. Now, let's take a look here at this as we are heading into tomorrow, okay? So we're going to take a look at the volume profile, do an analysis on that, pull out some bias. We're going to take a look at the psychological levels that I think we need to be paying attention to, because the institutions, the funds, the retail themselves are going to be paying attention to them. That's self-fulfilling prophecy mentality. And then we'll finish out with the expected move, which again on SPY, it is a luxurious experience looking at expected move because we have daily expirations, which is a great thing to use. And then we'll finish out with that directional bias coming out of the chain. Now, macro events tomorrow. Honestly, not a lot. Fed's Kashkari is speaking at 11:30 a.m. Eastern. That's about it. So let's get started here with that volume profile analysis here on the 5-minute chart. What we're doing here, guys, is we're peeling back a layer of the onion, right? We're trying to look at the volume itself separate from the move. We're looking at the underlying volume that correlates with the move, but we're looking at it separately, right? To see, okay, for example, on this big green push, did volume match and support that move? Or was there really not as much bias as it seems there was in the price action? We're going to look at the whole day. I'm not going to circle anything in particular today. Let's just go along and see if anything's out of context. Very normal open, high volume open, and then fade. Okay, couple of poppy bars here. Too much of a risk of fooled by randomness on those single bars, so moving on. We get later in the day, we get a couple of poppy green bars. Again, not a lot there. Now, the close is interesting, okay, because we know that last bar before the bell on SPY, which is actually different from the blue chips. The blue chips, the rebalancing from the funds and institutions will typically happen immediately after the bell. On SPY, we usually see both, with the majority occurring just before the ring of the bell. Okay, but here today, the increase in volume itself is contextual, right? If you compare that to what we got at the end of last week, it's pretty normal, the size, right? But we had 5 consecutive green bars in a row on that increasing volume into the close, backing an already pretty, I would say, relatively aggressive given the context of how volatile SPY typically is, which is not all that much. But to me, that's a small amount. It's not overwhelmingly clear, overwhelmingly obvious. But to me, there's a little bit of bullish bias there into the close when you start comparing that with the move. Okay, which I think is good to know, no matter whether you're positioned bullish or bearish. All right, moving on here. Let's take a look at those self-fulfilling prophecy psychological levels, starting with the 30-minute chart. This is, of course, all about the psychology. Very simple. The 50 period and the 200 period moving averages, the white line and the gray line respectively. Honestly, guys, today was kind of a repeat of what we saw last Friday. We just grinded higher without actually ever seeing a test. In doing so, we yanked that 50 period higher and higher. Remember we talked about on Friday, bulls? Ideally, we'd like to see a confirmation with a retest of the 50 period and a bounce. I'll be looking for that tomorrow. If we see a retest of that 50 period, I want to see us bounce away on higher volume. However, I have nothing against a move like this because we're making a move higher. Fundamentally, that's what we want if we're bullish, right? And in doing so, we're dragging the 50 period up with the actual stock, the ETF, right? And making it claim more ground. Presenting a higher, now in price, kind of backstop, a psychological level. It's one of many, right? We have to look at the 4-hour, we have to look at the daily, but it's in the mix, right? And I'd rather have a psychological level close to the price within a few points than 0, which leaves it wide open for bears to come in and say, look, there's nothing here stopping this thing from falling. So bulls, confirmation of treating that 50 as support is what I would ideally like to see tomorrow if we see a retest. But if you're bearish, us bears here, a downside break of the 50 period on as much volume as possible, ideally in the intraday session, right? But even if that were to happen in pre-market, what I want to see during the intraday either way is a retest on lower volume than the break, ideally. And then boom, volume increase and pours back in on the rejection as people go, yep, that's what we thought. We're going to bet on the rejection here. That lower volume coming in for the test, that shows us a smaller amount of bets being placed on the re-break back upside, right? Now let's move on to the 4-hour chart. Gives us a new perspective here. Now this is really good to see here on SPY, okay? You guys remember over the weekend, we were coming in on the 4-hour right for that 200 period, and that was, we were kind of right in the face of a potential area of resistance. We broke through that pre-market and pulled away. Now, understand, this 50 period likes to take its time on the 4-hour. However, having these big upside moves is dragging that up at just about the fastest pace you could reasonably expect. So, bulls, really all I'm paying attention to here on the 4-hour. Any back test of the 200 period, I want to see that hold as support since we have yet to really get true confirmation, at least intraday, on the 4-hour, the 200 period on the 4-hour in particular. I'd like to see that hold if we retest. However, what I'm really looking at here, if I'm a bull, is wanting to see that 50 period just reclaiming like 507.50, 510, 512.50 in the coming days. Not expecting it all to come at once. Again, it's a slower moving average, but I'll take any reclaim of any potential like psychological level, which I think really is on a micro scale, the $2.50 increments. That's kind of the smallest I'm willing to go. Now, bears, priority number one, really the only priority here on the 4-hour chart, because we only have 2 levels to look at that are specific to this one, right, is a break back downside below that 200 period, that gray line, which is approximately, you're looking at about minus 0.8%. So it's not a tremendous move to make that happen. So a downside break through the 200 period and holding beneath there would be a good thing to see if you're a bear, and that could potentially set you guys up if we get confirmation of that acting as resistance for a downside test of the 50 period. Now, the daily, this is where we look at the levels, okay? This is the most important chart of all. It has the most eyeballs and presents us with important levels, I think, to pay attention to, both psychologically and just based on price, which, let's be real, is all psychology anyway. At least in the short term, right? Of course, midterm and long-term fundamentals take over 100%. But in the short term, this video is geared toward tomorrow, okay? It is all psychology, with the exception of big fundamental repricing from things like earnings. So a big deal today, and you can bet that part of the reason we saw a 5-point plus move today, which, 1% plus or minus moves don't happen every day on SPY, is because we saw a break of that 50-day. It's just so obvious. That white line is the 50-day moving average, of course, on the daily chart. That is probably one of, if not the most common indicators on probably one of the most heavily watched charts in general in the world. Okay? There's a lot of eyeballs on that line. So when you break it and hold it, I am sure we saw some people buying in simply based on that fact here today. Now, does that make it a good move? Well, that's up for the buyer to decide. However, that's the psychology of this. It really does carry that much weight. So here's what I'm looking at tomorrow. Bullish perspective. Any backtest of the 50-day on the daily chart, of course. I want to see that hold as support. We broke it, but we have not confirmed that yet. Okay, bears, ideally, back below the 50-day is what's going to need to happen, of course, because, really, if you're a bear, what are your eyes kind of set on? Well, I would argue getting back below $500 a share as soon as possible. Okay, and in doing so, this is now a potential issue, that 50-day. So if you're bearish, looking at 5, which I think, many of you bears likely are, that 50-day has become a new immediate priority because that's now in the way, of course. Okay, but bulls, we still haven't confirmed that. So I really like confirmation. I'm not a huge fan of breaks and just rips for days and weeks and months, because inevitably there always ends up, it's fine if to make money in the short term. That's fine. Okay, but if you're really looking at this in terms of, okay, I want this to at least be healthy, so my position stays healthy, I think confirmation is key, even if it happens really early after the break, really soon after the break. Because if you never get confirmation, there's a lot of bears that always will look back and make that claim, and bulls, in the case of a bearish move, just the opposite side will make this claim, that like, you know, we never really tested that. And eventually, that opinion tends to become overwhelming and you end up ripping back for a test. Anyway, you know, I guess there's an argument to be had that extra volatility is good, especially if you're a trader. All right, but if you have a longer term position that you're keeping track of day to day, or you're simply an investor, the health is number one. But bulls, you know, without making a retest of that, again, a retest of that, I want to see that hold. A hold of each $5 increment and kind of stair-stepping on the $5 increments here on the daily chart is how I would kind of look at this. Like 515, a hold of 515 upon a retest, that would be good to see. A break and hold of 520, that kind of thing. The small stair steps to the moon is really the best way to look at this, especially on something like SPY, where you can't expect just an immediate squeeze. Nobody does. Okay, now implied volatility here, essentially flat here today, but remember, it's still low compared to the last month or so. If you're looking compared to the last 2 or 3 months, you're in the, I would say, the mid to low range. Okay, remember, the lower that goes, the more current contracts experience IV crush, and the lower that goes, the more favorable conditions become to go and buy those contracts, buy to open those, because you're buying when IV is lower. And then if you expect that to return back toward an equilibrium, right, that can benefit your held purchased contracts. Okay, but please understand, if IV continues to fall from the time that you purchase, that's not to say you will certainly lose money. It's just a part of the calculation that some of the Vega value gets sucked out. Okay, if you're correct enough directionally from the delta move in the contracts, it can outweigh that. Okay, but it can add insult to injury if you're incorrect directionally. I think my number one thing, guys, that I really want you to take away from these videos, especially if you're trading options, kind of a big, more macro perspective that I really want you guys to take away, is please, so many people, like 95% of people, I think, look at options as like they're just buying or selling shares for cheaper. Options are a very different vehicle. It's not one-dimensional like that at all. Shares, in a lot of ways, are kind of one-dimensional, right? You either make money or lose money from the stock going up or down. But the reality, and we're not going to talk about opportunity costs and all that, but the reality is, with options, it's a water balloon, but there's not just one hose putting water in or sucking water out. Okay, there's like 6. Well, at least 5 with the Greeks. All right, something like theta is kind of always trickling out. But if you can look at all the Greeks and set them all, or at least as many as possible, like at least delta, at least Vega, in your favor, and theta if you're using a premium farming, like selling strategy. But these are all things that can be set in your favor. So if you're ignoring things like the expected move because you're upset that the market doesn't give you a directional bias, that's on you. You know, this can be used as an advantage. Trading's not meant to be easy, but that's why it's worth it. Okay. Speaking of that, let's take a look at the expected move, which is the volatility expectation, which plays a huge part in that Vega, okay, along with implied volatility. So tomorrow's expiration, May 7th, the expected move by tomorrow's close compared to today's close is plus or minus $2.42 a share. Okay, so that's the current the market expectation for volatility by tomorrow's close, and that's being priced in literally by the options traders. Now, last thing here is we can get directional bias, but by looking at a little bit of a different thing here, the actual volume. This was actually shocking here today. About a little over 8 million total contracts traded. That's a big sample size today. 2.8 million of those were calls. 5.27 million were puts. That's a pretty heavy bearish bias here on SPY today. And look at this, guys. If we break this down, this is heavier than we've seen in a while on SPY, by the way. If we break this down by time frame, the short-term speculators, the 0 to 20 delta range, we had 886,000 calls. 3.13 million puts out of the short-term speculators. Heavy bearish bias there as well. Remember, guys, that's just one factor of many that we've looked at. But I consider it, okay? Listen, if you guys get value out of these daily SPY uploads, I ask you to do one thing. Takes half a second. It's 100% free. Leave a like on the video and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.